The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White. And we've got an interesting day kind of setting up here, maybe a reversal day. At least that's what I'm betting on. I did add a position today and took one off. And I think, if there is a secret to trading, it's no real secret. That is, cut your losses quickly and let your winners run. And that's what I did. I had one that was mildly turning down, got rid of it, and put in another position I think destined to do well. And one of my other positions in the daily newsletter up pretty well today. What do we see what we have here? Not bad. Not a bad pop. 9% today. So we'll bask in the glory of cutting one off on 1.5% lower or 2% lower and look at the 9% higher and bask in all of its glory. So as we do continue the show, of course, we've had a lot of action. If you're just tuning in now to TFNN, I've been out maybe working or doing something else. You missed Super Mario, coming out this morning at 8:30 and doing a round of QE in the, of course, Europe. And that caused pretty much what we've been waiting a year for, which is the dollar index to come up here and tag $84. Up 86 cents at 83.75. My guess is we hit $84 tomorrow. And you've got everything you want. I haven't looked at the contract volume. I imagine it's huge in the dollar index for the underlying contracts. Of course, I think most people look at the continuous contract for the dollar. The dollar contract or the dollar index is a basket of 6 major currencies against the dollar. And as we start to wind down our QE, of course, and pull that cash back, the dollar will strengthen. And, of course, as they throw more money at the problem in Europe, it will weaken their currency. And kind of interesting, the commentary from old Mr. Super Mario Draghi in Europe in the equivalent of their Fed. But basically, I think both the U.S. Fed now and the equivalent in the EU have said the same thing. And that is, we've done everything we can. It's now up to you politicians. We're done carrying all your water. And to a great extent, I think one of the fallacies of this recovery has been that the politicians could stand by over in the corner and let the Fed handle it. That way they didn't have to get their hands dirty. But it pretty much looks to me from the commentary from the Fed and from the EU out today that this is it. They've done everything they can, and we're going to give you a little less interest rate. We're going to cut that down to, 0.15? I think that's the interest rate in Europe now. And, of course, the other part of that is that they're going to do some kind of QE. Doesn't look like they have the ability to go and get the kind of funds that the U.S. Fed did because the way this thing is wrapped up. But they're going to do what they can. But what they're saying is probably not going to be another round, and this is the best we can do. It's time for you guys in politician land to get off your rear end and expect us to do everything. We've done everything that we can through monetary policy. Now it's your time, fiscal policy and monetary policy. It's time now for you guys to make an environment where businesses can grow and hire more people. And you just can't stand over in the corner telling everybody why they're evil for being the one percenters and employing a lot of people and making the world better, curing cancer, and all the other things that cash in a environment like the market does do. But I digress. On this day in 1882, the birth of the big investment banks started. Thomas Edison opens his Pearl Street station, the first central generating system making electric lighting and power possible in parts of New York City, and turns on the street lights at 3 p.m. Flips a switch at 23 Wall Street, turning on 106 electric light lamps in the offices of his financial backer, J.P. Morgan Investment Bank, Drexel, Morgan and Company. So they had a few people all invested in there. Of course, Drexel and Morgan and all that's kind of like a Reese's Pieces of you got your Drexel and my Morgan. You got your Morgan and my Drexel. Of course, there's only Morgan now. J.P. Morgan, to be specific. But this was the first big time that an investment banker banked a invention. And if you wanted to talk about the first technological revolution, you might be able to make a case for the 1820s with the steam engine. But the banks didn't so much get involved in that. That was some people that had a lot of cash and just started building them. Same thing over here in the United States, such a cash cow that they could take the cash, reinvest it, and build more on the rails. Although J.P. Morgan, a lot of those guys made their money, of course, supplying the steel to those guys to build the rails. But it is interesting. But when you think about investment banks today, it pretty much all started this day in 1882 with Thomas Edison, before he was able to steal everything from Tesla. If you wanted to be scared children, you don't need to go out and see the latest slasher movie on what is it, Nightmare on My 13th Street, or Freddy the 18th, or any of the other mad slasher movies. If you want to be scared children, and if you want something to keep you up, here's the chart to do it, and that's a long-term chart of short interest, overall short interest. And we are back to the lowest levels since 1987, and where the market cracked there. And a pretty good chart if you want it. I will be glad to email it to you if you want a better view of it than either in the Tiger's Den or on Tiger TV. But you can also just Google it by Investors Intelligent Sentiment Index, and you should be able to pop it up. And Google, just go to the bears, and we've got the fewest percentage of bears since 1987. And like I said, this is the long fingernails from old Freddy, with the Chucky doll kind of thrown in with a side of Halloween. And a young girl making her first movie. What was her name now? I'll think about it in a minute. Anyway, it is interesting nonetheless. But this has got me probably as worried as anything, especially the last 2 weeks of a huge turn down in the bulls. Over the last couple of days, I said I wanted to see what happened yesterday in the options market. I don't have any charts up here right now. Maybe I'll be able to get one before the end of the show. But what it really shows is option markers, market makers over the last 2 weeks don't have a real good indication of what's going to happen in the market. Over the last 2 days, they went incredibly wide. What does that mean? They don't know whether the market's going up or down. So they're standing off, basically 40 points up and 40 points down on the S&P right now. They don't have a real good idea. Of course, we've got just a little bit longer to go before options expiration. Tomorrow will be the first Friday of the month. Of course, expiration for monthly options, the third Friday of the month. So we're basically going to have 14 days before expiration. Starting tomorrow on the 10th, we're going to have Weird Wally Wednesday, where the market makers go delta neutral. We'll probably get a little better indication out there. But it looks to me right now, these guys don't want to, they're not picking a side. They're kind of standing off and making sure this is fairly wide. Of course, not a good time when you have the VIX below 12 points to be writing a lot of puts and calls. If anything like a Putin would come out of the woodwork and change that significantly, you want to be selling options when they're at when the VIX is at the high levels. You want to be a buyer of them when they're ridiculously low now. One of those things. If you haven't had a flood for 50 years in your area, the insurance is probably going to be pretty low. You're probably going to get a good deal. If it's flooded the last few years, my guess is you'd be better off without the insurance. In a couple of years, you'd be able to pay for your house. I was in that position 2003, 2004, when I had bought a house on the beach in 1998. Watched it more than double in price in a few years, and watched my insurance go from about $4,000 a year to about $8,000 a year, and walked out. A few years later, it was $42,000 a year for that same place. And again, you could have rebuilt the house in 4 or 5 years. It didn't make sense any longer, and that's pretty much it. So it's going to be interestingly nonetheless. Other things out here, of course, when the media starts paying attention to the stock market, always be worried too. The Drudge Report, for better or worse, depending on whether you like it. Of course, Mr. Drudge doesn't have any opinions of his own. He only publishes links and maybe writing a short, pithy headline, which makes me wonder why people are so mad at Mr. Drudge, other than the fact that maybe he is pointing to news that they don't like. To me, I always like more discussion and more talk, not less. I don't think we have to quiet anybody out there. If you're a skinhead who is a Nazi, I think just let those people talk. I think they make idiots out of themselves quick enough. I don't have to try to make sure that they lose their job so they can't talk anymore. But when you see probably the single definer of what is going to be news, at least on talk radio during the day, and probably on the talking head shows on cable at night, it is the Drudge Report. And, when you see this, I always pay attention to it, because it means that that's probably what the majority of Americans are looking at. And how do they react to that news, too? But that's all you got to see if you're not watching on Tiger TV. Got a real big boom here from like the 60s Batman, where they used to say boom, bam, whoppee. Whoppee even a thing? We'll be back in a minute. We got a lot more news to go. Zap, that's it, zap.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As always, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And what else can you do? You can post a message in the den. But I did get an email from Ron from Texas. Didn't tell me where in Texas, just that he was in Texas. That's kind of like saying almost North America. Of course, Texas is a pretty big state out there. But he was wondering about something about Putin, and he had kind of a long, involved question. But I guess it gets down to, for the same reason people ask, how could these ISIS people cut people's heads off? And, such medieval kind of, you have to be about 500 years ago kind of thing. And it is one of these things where the psyche of Russia is a whole lot different here than in the United States. And there's a great fable here. And then we're going to get to John and Philly in just a minute. Just a minute. But this fable basically sums up Russia, and I heard this since probably the late 80s. And the fable goes: there's two peasants who live in neighboring plots of land in Russia. One peasant owns a goat; his neighbor does not. One day, an angel of mercy comes down from heaven and speaks to the peasant who has no goat. The angel offers him one wish, anything he wants. The peasant makes up his mind immediately. please kill my neighbor's goat. And that probably sums up Russia better than anything else. They could care less if they had a little more, if everybody else had a little less. And probably why they adopted communism and socialism, just so they could make each other miserable. But Putin, pretty much a legacy of that. Anyway, we're going to go to John in Philadelphia. How you doing today, John?
David, you and your sum of all fears, man. That Putin fable, that's terrific. That's terrific.
Is that where I first heard it from, you think?
I suspect, yes. Say, David, gold and silver are weakening as would make sense with the dollar surging.
Mm-hmm.
And the selling in mining equities is picking up pace today.
Yep.
I wonder if you could look at GDX and tell me, as you look at your techniques, if this selling here, if this indicates to you something more severe coming, or if it alternatively might be the sort of setup that could lead to a bottom soon. I'm wondering for your view on that question, please.
Okay. You've listened long enough that I said that you want to buy gold when it's incredibly hated. And I have still not seen that. The last couple of bottoms we've had, there wasn't a lot of people willing to say that it was over. And I had too many people wanting to buy it at the lows. I did not for that reason. It did go up, so you could have made money. I've been wanting to buy gold when it comes down, but it's going to have to be so universally hated to make a long-term low and get everybody out of it. And all the phone calls stop to Tom at night, and people threatening that they don't want to be any part of his gold newsletter anymore. And at that point, I think it's probably going to make some kind of low, and there's just going to be no bears left in gold, and that will be it. But I just still haven't seen it. To me, this thing is nothing more than a trading range, probably going down to either 1225 or 1175. Kind of until we get back down there, it's kind of hard for me to see anything else. But I think this thing's just going to beat along the price of the lowest price of production, which if you listen to some people, it's anywhere from $1,050 to $1,200. But I think there's going to be enough of these gold companies going south here that they're going to be bought out by other companies. But I just don't see, a lot of them went and grabbed more cash, bought more stuff, and only made their problems worse. So, like you said, I've been short gold for a little while. I think our trade's up about 20% on that in the daily newsletter. And I think, we could have a 50% winner in that particular trade. So I'm still looking for this thing to go down, but I think even the most mild of corrections would take us to 1225 or 1227. But
okay, David, with having said, sorry.
Yeah, we're going into the break. If you want to hang on through the break, we'll talk on the other side. But
you.
It's. I don't think it. Am I predicting the end of the world here in gold? No. I just think we're in a bigger trading range out here. We'll look at the GDX when we come back with John from Philly.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, we've got John from Philly on the line. In case anybody like me nodded off, we want to ask you a question again. Hello?
Yes, David. Thanks for sharing the backgrounder you have for the gold price. And I'll just observe with gold at 1264, gold has declined a long way towards reaching kind of the targets you just laid out. Or alternatively, GDX is now falling, and there's wide price spread today, of course.
Not a lot, but yeah.
As far as how much GDX has declined relative to those May 30th lows thereabouts, it hasn't been nearly as much as gold. So the question I've got is, do you see GDX selling to drive down towards those lows and, if you will, catch down to gold? And if not, what do you see?
I think the gold miners could see a lot worse than gold. I think that if what Tom has been saying about the price of gold production is correct, that they could see a huge problem. I have a feeling that gold's going to stay down just long enough to wipe a few of them out. You know, especially on the small junior side. especially the juniors, are probably the worst managed companies in all of the stock market. There's probably not a worse industry for finding people that probably shouldn't have a job as CEOs. There's a handful of people that know what they're doing, and we hear their names all the time.
Well, that's
right?
pretty damn definitive, David.
Yeah, so to me, a lot of these guys, of course, listening to Tom, I picked up a lot of this stuff, but to me, it just looks like a lot of these guys probably picked up gold mine at prices that they just needed to have gold high this year, that they didn't have enough cash to go through a pullback. And I have a feeling a lot of these things are going to be in real big problems, either going to dilute their stocks with more shares coming to market and or huge loans that they'll probably never pay back. So there's probably a handful of these things that have got it wired. I would say probably half or more than the stocks in the juniors have a good possibility of at least 50%, if not 75% lower.
Okay, David, thanks on that. Now, you've got GDX courtesy of your timing the trade charts.
Right.
2502 currently. Where do you see this going, if you will, please?
Well, we're getting into the day of volume out here that was on the 19th of June. And it doesn't seem to really do much for it. You got a little gap here, so probably we're going to stumble around. I think the answer is going to be tomorrow. If we don't sell off into the weekend, then it's going to be problematic for my position. But to me, other than this one day, to me, I'm just thinking we're in a bigger trading range down to that 2193 on my May 29th. So to me, this is just a lower trading range, consolidation range at the moment. And the gravy on my trades would be a few of these really stinky miners either having to issue more shares and or take huge loans or sell out for dimes on the dollar.
Excellent.
So I don't think that there's a big problem with a lot of the bigger ones out there. But as Mark Twain said, a gold mine is a hole in the ground with a liar standing next to it. And I think a lot of these real tiny ones are nothing more than that. These guys have no idea what they're doing. They don't even know. They're so stupid they don't know that they're lying. Let me put it that way.
Well, that's a blessing in disguise now, isn't it?
Yeah. So anyway. Okay.
Thanks so much for your help. I appreciate it. 22, here we come.
Okay. Bye.
Okay, bye.
Anyway, we were talking about what we were talking about. We were talking about Putin. And, of course, you can be like John and give me a call, too, at 877-927-6648. But back to the email where we're talking about Russia and Putin. A lot of people are saying, well, I just don't understand his end game. And a lot of it is just retaining power. Part of that retaining power is just making other people miserable in and around his general area in the area of Russia. Anybody that he touches, of course, they're just mean and evil people. Not all Russians, but that whole idea in the 80s that the Russians love their kids too. I've been over there. It kind of reminds me when I watched the special about getting rid of alcohol in the 1920s here in the United States. Trying to remember the guy that makes all those movies on PBS. But just the horrific stories of how many people were miserable, mean drunks, and taking their paychecks and spending it all at the bar, and the kids starving. His kids and his wife starving, but which pretty much led to Prohibition. But I think that's the name of the movie from Ken Burns, Prohibition. But very interesting. But I've been over there. I don't know if it's significantly changed in the last 10 years, but I would say that there are a lot of people with different cultures and values. And as far as I could tell from Russia, a great deal of those values is just if someone else is more miserable than you. And the people in Germany came up with the word Schadenfreude because of the Russians, which gives you an idea of it. So I don't think that Putin's in such bad rapport with the rest of his folks because as far as they're concerned, as long as everybody else is doing horrible, they can be happy. We talked about Apple on September 9th being a huge day with their rollout. There's one other big rollout happening the same day. If you haven't heard about it, my guess is we'll start seeing it on TV probably starting on Monday. Destiny is one of these new huge games where hundreds of millions of dollars has gone into developing it. And this is kind of two of the best game genres put into one. First-person shooters, which I like to play, and massively multiplayer online MMO games also. This is called Destiny, and if the alpha and beta reviews are of any event, probably the biggest game title to ever come out. Look for eventual sales in the neighborhood of $1.5 billion, maybe $2 billion. And if I read it right, I'm thinking that the development cost for the game is going to hit $300 million. So one of these things, the developer Bungie, of course, a lot of the other people, Activision, I think it's Activision's behind this, but I'll look it up during the break. But just know that this is going to be coming out. You're going to see a lot of ads about it. But bigger than the movies, games have figured out a way to basically develop themselves into something more profitable than movies and certainly much larger for a single title. And people putting up the cash like them better than movies because they always take alpha and beta tests out there with a great deal of the people that would be buyers of these games, and they get feedback and they change the game and they update it. But it ends up being one of these things where movies, television probably becoming less of a deal with Netflix, and certainly maybe movies may be outflanked by games. And one of the most interesting things I saw this week was a new survey showing that how many of these computer games are being played by women, a lot more lately in the last few years than have been played by men. So the fastest growing sector out here is this going to be an issue. Ciena came out with earnings this morning. They provide communications networking equipment and software, basically everything you need for the internet, video, voice, data traffic worldwide, switching, aggregation. But saying that things don't look very rosy. They were off about 8% earlier today. I haven't looked at them lately. Maybe we'll get a chance to if we get time. Now, here's one that I've been waiting for a while, and this is one, if you are bullish on the market, I would be looking extremely close at. We've heard, of course, about credit cards being hacked at Home Depot. We may have reached that tipping point where the vendors and the stores are willing to finally pay for the new credit card readers. The new credit card readers have a thing in them called a smart chip. Now, Europe's been using these for 10 or 12 years. That's why you don't hear about huge hacking issues over in Europe. It is very tough to make a card that both has the magnetic strip reader and the secure chip inside it. But they did come out with earnings today. They are up, and it was up earlier. We'll look at a chart in a minute. But their new credit card swipe machines with the smart chip readers in it are starting to sell. And, well, NFCs, that's a whole different thing. He's got a comment in the den out here. Near-field communications does make this an issue, but, again, now somebody standing next to you in line can be sniffing your NFC communications. Now, maybe they can't break the encryption. Maybe they can. Credit cards still are pretty good because you'd have to get physically into the box to read it. But the combination of the encryption from the smart chip and the card reader gives you at least 2 levels of authentication, make it a lot tougher to hack. But this is why it's not been a problem in Europe, and it is a problem in the United States. We have a single strip on the back of it. You can get a phony driver's license, steal your credit cards, buy them with Bitcoins, have huge gangs of people, which are down here in Florida and Texas and in California, to go out and buy stuff, sell it on Craigslist later, take that cash and send it back to Russia. And that's how the whole merry-go-round moves. But I've been waiting for Paychex to actually, or not Paychex, but PAY, Verifone Systems, to finally say that they saw an uptick in these new readers. Because to this point, everybody, I mean everybody, didn't matter how big a retailer you are, has avoided buying these machines because, of course, you got a Sears or a Home Depot. You may have to put in 20 of these things if you're going to have them at every register, maybe 30 of them per machine, and you got 1,000 stores, so suddenly you're buying 3,000 of them. Watch Verifone's very closely in how it trades. I'm bearish on the market, or I'd be long this thing right now. Anyway, you can always give me a call at 877-927-6648. You can email me at path@tfnn.com or post a message in the den. Yes, the credit card companies will have to issue new cards, but they've been doing it in Europe because Europe made them. That's kind of it. Let's get to a lot of the stocks that we're moving. Let's go look at pay real quick. But a good fundamental reason out here. This thing kind of popped higher, but again, problematic in seeing this thing in what I think is probably a good chance we've seen a short-term high, at least, if not a medium-term high in the market today, at least in the S&P cash. We may still have a push into next week as this market continues to roll, but I think there's a good chance that we've got at least some high volatility coming to us in the next couple of weeks. And, of course, in September, historically, is the worst month of the year for the market, and the average down is 2%. Not a huge move. That'd be a couple of days in this market, but I think we could see at least some of this, and I'm starting to move for that level in my newsletters. But, you got a nice gap up here at about $38. If the market does hold up for a little while, we could see it into that 37.5, 38 range. But I think if we get a big pullback out here, I would love to get this thing maybe back in the 32s or 31s after a market correction. Other stocks that are moving out here today are Amazon. Bernstein raised its target to $450. As I said before on Tuesday and Wednesday, this market has no end to the amount of people with ludicrous calls on stocks. It makes me think that there's a good chance that they were running shorts the early part of this week. In Amazon, I think we're running the shorts here today. Amazon has a lot of good things about them. One thing is that they don't make any money because they spend it all. What would earnings really look like if they turned around? But one of the weaker stocks out here in the big 4 or 5 in the NASDAQ. We'll be back in a minute to talk a little bit more about Amazon and some of the other stocks that are moving. Give me a ring, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. And I just love you all, just especially some of the private messages in the den. But I digress. Of course, looking at Sienna, of course, we talked about this. Down on heavy volume, going to break the August 14th low out here. Looks like it's going to head for this gap. That gap goes back quite a ways to high volume. And you're probably going to find support there in this one. Never was a stock I was looking at to short, but this thing went up with 24 million shares on June 6th of 2013, and that's been acting as support. So not a lot of downside to that particular one. GoPro got a downgrade today. So like a lot of these, probably need to start putting the lockup dates on some of these high flyers out of the gate that are fairly new in the IPO market. I'm going to start looking at these probably this weekend and start putting my fall calendar together of 6 months and when shares are available in those stocks. I'm thinking we get a Twitter kind of reaction on GoPro. It just seems like hard hard to think that they're going to be able to carry those margins for long in this. When we look at other movers out here, Costco reported August same-store sales up 7% versus basically 5%, which is what everybody was looking for. Costco up with heavy volume. Looks like it's going to go tag 126.12, which is the November 26, 2013 high out here. PVH beat on EPSs by 9 cents, reported revenues in line, and, of course, reaffirmed earnings. This one's right back up to its level of resistance. It needs today 5.4 million shares. We got 3 million shares so far, and just finished filling the gap out here, so you probably want to look at that one. TVIX, a company announced a review of strategic alternatives. Basically, we're running for the door if anybody has any cash, back up to the May 27th high, $21.80. Blew through that, but kind of coming back into that trading range. Just 6 million shares so far today, so you want to keep an eye on that. United Airlines, what was the deal on this? Company took delivery of the first 747. First 787-9 aircraft. That's the extended range one, I believe, and a few more passengers. But got to look at these airlines, maybe even with the lower fares. We talked about, I think I posted a message in the den to Tom O'Brien during his show about JetBlue starting to offer sales on airlines, and maybe this is as good as it gets. Certainly you wanted to see heavier volume going into UAL's January 22nd high at $49.50. Had almost 7 million shares. Got 3.7 today. Looks like it's going to be a light. So a lot of stocks out here. Looks like the review is going to go a little bit farther for the Obamacare, and really starting to make some of these super high flyers in the healthcare sector come off with volume. You certainly have that today with UHS, and that's right. The U.S. Appeals Court to reconsider subsidies cases related to the Affordable Care Act, or Welling named Affordable Care Act. According to the reports, HCA also lower. Remember to sell when you can, not when you have to. Be here tomorrow, same bat channel, same bat time. Yes.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
You're watching Tiger TV.